Brian Belski joins me now. Brian, good to see you. Wall Street seems to be seeing something that Main Street's not. It's looking through the current problems. When will Main Street start feeling better about the economy? That's what I want to know.
A great question, David. Thank you so much for having us. It's great to be back on Fox Business News. You know, the consumer discretionary sector has been one that has been a little bit choppier, clearly, with respect to what's happening on the consumption side of things. And remember, the new Fed chair has a dual mandate, not only in terms of what's happening with respect to inflation, which everyone's worried about because of the complex PTSD in terms of 2022 and what happened. But remember, and you have to remind the viewers that the inflation that spiked in 2022 is very different than what's happening right now. And with respect to longer term effects on the economy, you need to see demand destruction over several months, not several weeks, with respect to oil. That's why people are jumping in the car today. That's why I'm jumping on an airplane and moving my HQ back to Minnesota today. But at the end of the day, the economy is strong. And I think what everyone has missed, David, is that this is, we can get excited about the tech stocks you talked about in the top of the broadcast, but this is really an earnings-driven market. And earnings-driven markets are actually much more fundamental versus the momentum and price performance markets that have been really driving people chasing stocks, especially last year.
Which means, by the way, the consumers, they may tell pollsters that they're not feeling well, but they're still buying stuff. As you say, there's not that kind of demand destruction. Even consumers, I think, are looking through the current crisis. But I want to talk about Kevin Warsh, going to be sworn in as the next Fed chair today. It's going to happen at about 11 a.m. Eastern time. We have gone from thinking about a rate cut a couple of months ago to thinking about a rate hike. Obviously, it's the war that's got in the way, but could it be that Warsh just keeps things as they are until things settle a little?
That's what we think is going to happen. You know, we said about 4 years ago that to normalize rates from a longer term perspective, we need to see a range of the 10-year Treasury between 350 and 450. As of this morning, we're kind of the top end of that 450 range. I think the market and the economy can do very well with that. I think he is going to bring in a little bit more consistency in the messaging and be in line with what's happening, again, on the dual mandate side of things. We are so focused on the oil price side of things, and we know that inflation has been lingering a little bit higher, mostly due to what happened in 2021 with all the free money being floated around and all the liquidity and so much supply of money. But this too shall pass on the oil price side. And just like oil prices went up pretty fast, they're going to come down a lot faster too. And no one's really talking about that. But lastly, in terms of employment, I mean, we have been an employment juggernaut in the United States, and that's going to continue. AI is not going to steal jobs. In fact, we can build a case that AI is going to build jobs. And we believe that the efficiency of the United States market in terms of fundamentals continues to reign supreme.
Well, they don't call you bullish, Brian, for nothing. Brian, great to see you, my friend. Thank you very much. Have a wonderful long weekend. Appreciate you coming in.
Thank you. You as well.
All right.